Hey everyone, it's Evan here from the Trade Risk on Tuesday, November 28th here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Today's session, we got financial stocks surging to the upside, new all-time highs across the board in all the major averages, and the S&P 500 is almost entirely outside the upper standard 2 and 20 Bollinger Band. We'll cover all this and more when we jump into the charts right now. All right, we'll jump into here with the S&P 500, the SPY ETF, and you can see here on the session, we finished up 2.6 points in the SPY. That's good for 1% higher. Notice the expansion in range. Notice the uptick in volume today, traded over 80 million shares in the SPY ETF, and really just speaks to the strength and this trend that is continuing up and to the right. New all-time closing highs, really leaving behind this old prior range that we looked at for quite a while here around 259 or so, and we are just expanding higher up and to the right. If we go to that weekly chart here, you can see we are getting that follow through from last week's breakout. Remember, last week was sort of this week one resolve of about a 3.5 to 4 week trading range, essentially moving sideways in the S&P 500. Last week was that breakout to new highs. So far in early trading, it's only Tuesday. This isn't a closed weekly bar yet, but so far so good in confirming last week's breakout to new highs. Notice also the distance that we are away from the 8 period, the blue line here on my chart. This is a weekly chart, remember, and we're looking at the S&P 500. So typically we don't see these markets melt up and entirely get loose here to the upside. So when we get about this distance away or so, we tend to get that magnetic pull back to sort of slow us down and consolidate, potentially pull back. We're not seeing that just yet. We're in a nice momentum kind of expansionary phase right now, but be aware that we are a bit here extended now, particularly after today's move. And in fact, if we go back to the daily chart here at the top of the video, I mentioned we are, with this candle here, we almost traded entirely above the upper 2 and 20 standard Bollinger Band if you were to throw those on this S&P 500 chart. So it's not a short signal by any means in itself, but it should give you some perspective to say to yourself, well, if I'm thinking about getting long this market now, maybe I should think otherwise, or maybe I should reduce my risk because we've covered a lot of ground. I know that because we're above that upper Bollinger Band. Can it continue? Absolutely, but it may need to kind of settle in a little bit and cool off in the very short term. So basically, looking at this market here, the bulls are once again just checking all the boxes: trend, momentum, breadth. Everything is pointing up and to the right now. Doesn't mean we can't have dips. They can happen tomorrow. We got headline risk out, of course. We had North Korea, which briefly caused the market to pull back a bit on that headline of another missile launch. And then we had the tax bill kind of, we had a good amount of headlines that the market was wrestling through today. And ultimately, we did finish near the highs. But that doesn't mean that this can't get derailed. So you always need to be managing risk regardless of the market environment and conditions that we're in. So that's the S&P 500 in a nutshell. Basically, there's not a whole lot to say about it. We're at all-time closing highs. The trend is strong, momentum strong. Let's take a look at some of the other major averages here. We'll go to small caps next. This is the Russell 2000. You can see a beautiful finish here, up almost 1.6%. We had about a 3 or so day consolidation, just a stall out, let the moving averages catch up, let some of this overbought action or some of this strong run-up that we saw last week sort of work itself off. And then today we saw a beautiful sort of textbook breakout to new highs here, this upper level base resolving higher, and this breakout and expansion in range that we saw here today. So if we go to the weekly chart in the IWM, remember this is looking potentially like it wants to get fairly symmetrical here. We had this nice run from end of August all the way up here, about 10, 15 or so handles in the IWM. We pulled back for 7 or so weeks, and now we're breaking out with some authority and definitive to the upside here and making new highs. So we still have this position on in the IWM. We did scale some today. We got involved in it back here on the 8th of November, where we got long the IWM. We sold 30% in here. We sold 30% again today. So we got about 40% of that original position still on, basically looking to continue to trail a stop and reduce that risk as this market continues to extend itself. That's generally our philosophy in these types of trades. So we're still long the IWM, but a little less so than we were when we started the day. Next, if we go to the NASDAQ 100, you can see here kind of the sluggish one, but really, I mean, you know, look at this chart. There's not a whole lot to dislike here. It did only, you know, advance 40 cents here on the day. It was good enough for all-time closing highs here in the Qs, and you can see we're still above a rising 8 and 20 period moving average. The momentum, the trend is still strong here. So the Qs, really not much to you know, throw stones at here. We could, you know, keep an eye on a possible divergence, a negative divergence here if the Russell and the S&P 500 continue to charge higher and the NASDAQ slows down. Maybe we start to see that rotation play itself out, given the fact that the Qs have had such a nice run. But really, not much else to say here until it starts breaking below, say, 154, these prior highs in here on the recent breakout. That's where I would start to get a little more concerned, or at least pay attention if we were to start to lose these levels in the Qs on the downside. So that's the market environment as a whole. Once again, things are looking pretty good. Bulls have the check boxes sort of in their favor right now. Doesn't mean we can't pull back, simply means you want to basically align yourself with that sort of dominant trend. If we go to some of the other major markets here, TLT, pretty much a muted day and pretty much a muted week so far. We really didn't do anything yesterday. We recovered those gains. We're essentially flat on the week here, and you can see we're just kind of basing out above this 8-period rising moving average here on the daily chart, which is above a rising 20-period moving average. So the short-term trend is healthy here. Bulls are in control, but this 127 level seems to be at least cooling it off right now for the TLT. If you're looking for some next of that next tier momentum, just take a look at today's highs, this week's highs, last week's highs, right around this, right above this 127 level. That's what I'd be paying attention to in the TLT for some continued momentum. If we go to metals next, GLD, not too much today. Basically, again, a flat session, opened up a little bit higher, and then basically just kind of chopped around and finished basically, you know, a little bit lower than when we opened on the session. Still above a more weekly rising 8 and 20 period moving average, but bulls are here in control in the short term for GLD. Silver, not so much. Seeing a bit of an expansion in range here to the downside. Now, this is a position that we've been in for a couple of weeks. We got involved in it right back here on the 6th, and it's been chopping around. We've been giving it that room. We decided to cut the position today as it had this high volume kind of shakeout day, or, you know, I mean, it could be a shakeout day. It could have sold the bottom here for our positions. It's entirely possible, but there's, you know, basically at this point, there's too many good setups out there that I'm seeing to be tied up in this consolidation. It is very possible that this could be a shakeout, and if SLV starts to break out once again above 16.25, I'll happily jump back into this position, but took the small loss for now. Not looking so pleasant here in the very short term. These the 8 and 20 period, those fast moving averages are very, very flat. They're above price, and they're looking like they want to start to get pretty ugly to the downside, but anything can happen. So we'll have to see how SLV plays out. You could arguably say it's still just moving sideways in this range. We'll have to see. Basically, if you're a longer term holder, you'd want to look at that weekly chart, see how we finish out the week, and maybe base your decisions off of that. So SLV, no longer position. We took the loss there. USO. USO continuing, you know, basically flat. It was down a little bit here on Monday. It was actually down a little over 1% on Monday, so we're down almost 2% on the week. And you can see, looking at this weekly chart, we got basically, you know, what we'd call an inside week. We're trading entirely within the low to high range of last week's session or last week's candle. And last week's candle was fairly large. It was over about a 5% range or so. So for now, inside week candle developing. We're above an 8 and 20 period on the daily chart. Bulls have that short-term trend of control sort of in their place. So let's see if that starts to change. If we were to definitively lose, say, 11 1150, 1145 or so. That's when I'd get a little more, at least neutral in the very short term for you active traders. Longer term, you know, we'd have to see us break back below this $11 pivot that we made just last week or late 2 weeks ago, I believe, for USO. Finally, natural gas. If we look here, we saw a nice upside move in UNG here. This thing's been all over the place, a tremendous amount of volatility. So if you're an intraday trader or you're looking for really short-term swings, UNG's been a good one for you over the past, you know, basically month of November. Take a look at where it's come. We started the month off down here around 580 or so, saw an over 10% rally up to 660, and then it round tripped entirely, and now it's bouncing sharply off of that. So all over the place. Basically, we got some horizontal levels drawn here where price has been influenced in the past. Those are the big markers that I'm looking at. But generally speaking here, looking at this, it's really a big headache here if you're trying to you know, find trends on some intermediate basis. Just not seeing it right now, so I'd rather just wait until UNG is back above, say, 650, or it's making new lows below 590 or so. Right in here, stick to intraday trading or try not to get chopped up, I think, if you're looking at natural gas. So those are all the major markets. Let's take a look here at some of the sectors, and really this today I think we saw green across the board in all the sectors, but the standout today hands down were financials, up 2.6%. This is a hell of a move here for financials, which really don't have you know, the greatest amount of beta behind them, generally speaking. But take a look at this candle here, really from this, you know, multi-day sort of tight sideways range that it was in, expanded all the way back up to these October highs here. It didn't quite make, or very, very close. Let's take a look. 26.88. The close back on the second was 26.89, so not quite a new all-time closing high here for the XLF, but very, very close. In fact, it's looking like it would want to do it tomorrow if we see more follow-through to the upside. You know, you have basically, you know, in the short term now, you got the lows from today, which would be a good spot to sort of measure risk against going forward. If we were to lose today's session, or if we were to quickly give it back, then you know something sort of amiss here, and you'd want to be a bit cautious. But, you know, in the short term to intermediate term now, XLF, this is a potent move, something to pay attention to. A lot of the banks had a pretty outsized move here on the 15th. Take a look at, which will stray from the usual recap, but Bank of America comes to mind just because we own it. If we were to look at this day right here, we saw a number of these banks put in this fairly loud reversal, outside reversal day here. And you got to remember that you're in the context of a longer term uptrend in some of these financials. So this was a signal for us to get long in BAC back on this day, and then it was sideways, and then we're seeing another kind of secondary move higher. But I think XLF, you had the slight some clues here on the 15th and a number of those issues. And then today, just really seeing that kind of follow through move back to the upside. Also, notable today is XLI. You can see a nice surge here, expansion in range. So this is industrials, seeing a nice move back, not quite back to highs, but getting basically some rotation back into these names that were out of favor for the past couple of weeks. IYT is another one. This one was underperforming for basically all of October and early November. You can see again expansion to the upside here, almost 2% move on the day. We're still off of the highs, but higher volume today, some rotation coming back into these names that were beaten up and kind of left alone for the past several weeks. Staples as well, so it wasn't just a risk on rally. We saw Staples also moving today back into this range. We saw a nice V-shaped rally basically ever since the 7th of November, early November, on this reversal, outside reversal day here. We're just continuing to kind of lead higher and charge higher. 8 and 20 period are rising up below price. It's a bullish signal. We're back into some messy, choppy range, but so far short term, XLP, the staples are very much in control by the bulls. And then the last one we'll look at is XLE today, which is now this sort of new kind of underperformer, the laggard. Hasn't really been in favor ever since it broke back below this $69 level. But notice it is potentially finding some support here back at these late October lows. 67 or so is where we saw this outside reversal take place, which led to this breakout, which led to a failed breakout. And now we're kind of just slogging it out right back towards these lows here. And so far looks like Dip buyers are a bit interested here. Saw a slight uptick in volume, reversed yesterday's candle. So some maybe short-term promising action there in the energy space, and you got some place to measure risk against if you want to take a shot or establish a position. So that's the recap for today. I hope you guys are off to a good start trading so far. Thanks so much for watching. If you do like these videos, do subscribe to our channel. Bottom right hand corner keeps you up to date with all the latest that we're putting out. Thanks again, and hope to talk to you again on Friday.